Mortgage demand is rising as inflation cools. Applications hitting a 5-week high. New data from Mortgage Bankers Association showing demand rose about 3% last week. But as another Fed rate hike looks more and more unlikely, does this mean the housing market could be ready to get a boost? Joining us now is Daryl Fairweather, chief economist over at Redfin. A new report from the firm says an 8% mortgage rate won't be seen anytime soon. So Daryl, great to see you, and I'll let you answer that question. Is this the kickstart the housing market needs?
It will kickstart some people back into the housing market, but it's not going to be a major turn of events. We may just see a few more people decide that now is the time to make a move and lock in a rate, but mortgage rates are still substantially higher than they were last year. Sales are still down, so I think it's going to be a slow recovery.
Do you think, Daryl, that mortgage rates have peaked?
I certainly hope so. I mean, anything could happen with new data prints, but it's good to get some good news. Hopefully, we continue to get more good news about inflation cooling, and that continues to be good news for mortgages.
I mean, when we look at history and we look at other mortgage rate cycles where we've seen a big increase in rates, how long do buyers tend to wait, right? I mean, it's difficult to time this stuff, but do they wait for a 0.5 percentage point decline? How does it sort of tend to play out?
It depends on what situation the buyer is in. If the buyer is debating whether to rent versus buy, it's still going to be more affordable to rent in most of America compared to buying. And if a homeowner is considering whether it's a good time to sell and move again, it depends on what the price point is of their next home. If they're downsizing, then these rates don't matter so much because they can use their equity to pay more in cash. But if they're upgrading to a newer, more expensive home, then these rates matter a lot. And any little movement is going to have a big impact on their budget.
And Daryl, sometimes you'll hear people, they'll make the argument that what's going to break us out of this impasse here in the housing market is just life events. People, they get married, they get divorced, they have kids, the kids go off to college. Is that enough, do you think, to kickstart the housing market?
I think life events tend to happen sporadically, so I don't think it's the kind of thing where all of a sudden everybody is getting married or getting divorced at the same time. It's going to be more of a slow trickle of people deciding that, I can't wait any longer and I want to move. But a strong economy does mean that more people are moving for job opportunities. They feel more confident. They feel like even though rates are high, they can make it work for their budget. So that's a positive, is that the economy is still quite strong.
Daryl, I want to go back to something that you guys wrote about recently, the so-called nepo-homebuyers, right? That we were seeing, because of the affordability problems, we were seeing homebuyers, particularly first-time homebuyers, get help from family. Is this a big change compared with history? Are more home buyers needing to get that kind of help? Sort of put it in perspective for us.
What's different now is that mortgage rates are very high and prices are very high. So if you're trying to scrap together a down payment, it is very difficult. And the more of a down payment you can put together, that means the lower your monthly mortgage payment is going to be. So if you only have enough money to put 5% down, that means you're going to have a really big monthly mortgage payment. But if you have help from family and you can get to 20% or you can get even above 20%, then that means that that monthly payment is going to be much more affordable to you. So having that help, having somebody to give you a cash gift, is a huge advantage in a market like this.
And Daryl, part of what we're dealing with here is limited inventory. Do you think, just as an economist, that regulators and lawmakers should be doing more, could be doing more to increase inventory, increase supply?
Absolutely. And it's not that so much lawmakers need to intervene in the market. What they really need to do is to make it so that these zoning laws aren't so restrictive. We need to actually decrease the regulation on builders so they can build more dense housing, especially in places where land values are high, because that's where the jobs are, that's where the amenities are, that's where everybody wants to live. And it doesn't make any sense that we restrict that supply by only allowing for single family homes.
Is there any movement on that front?
Yes, there's been a lot of movement in places like California, Montana, Florida, across the whole political spectrum to rezone. And then we're also seeing some other creative tax policies, like in Detroit and in Minnesota, to tax land instead of the properties, so that encourages more development, because then you're not being penalized for building more homes.
And finally, Daryl, I want to get your take on a separate issue, which I know you've written about, you've researched and reported that a lot of young Americans receiving family money to buy a home. What are the trends you're seeing there?
Well, about 40% of people under 30 received help from family, either a cash gift or an inheritance to buy their home. And what's so important about understanding that is that people whose parents were homeowners, they existed in a different time than right now. They may have had advantages and had programs that helped them that younger generations didn't have. So the historical context matters. And I think we need to make the playing field level for young people today so they don't have to rely on having wealthy parents or homeowner parents to get their foot in the door into the housing market.
Daryl, good to catch up with you as always. Daryl Fairweather, appreciate it.
Thank you.